Yo, what's up? Saturday. I think a lot of you don't understand central banking. And in particular, let's talk about the Fed. The Fed is a bank. It's called a central bank. Pretty much everybody is familiar with banks. You probably have accounts at banks. Banks extend credit. They extend credit against some collateral. Same thing with the Fed. All this stuff like the Fed printing money, they're printing money, it's printing money. And people who ascribe all these like unbelievable powers to the Fed. And in their minds, the Fed has there's some mystery, there's some evil, something behind it. The man from Jekyll Island, all this crap. The Fed is a bank. All right? It does not create money. It lends against assets, like all banks do. When the Fed does, for example, quantitative easing, which every time we hear that, people go hyperbolic, they freak out. What the Fed is doing is just changing the composition of the financial assets in the economy. It's an asset swap. So the Fed might add reserves and it'll remove securities. It would be like, let's say you have $1 million in treasuries and I have $1 million in cash. And we exchange that. I give you $1 million in cash. You give me $1 million in treasuries. Has your financial position changed? No. You're still worth $1 million. Actually, you might even be worth less in that example because you're not earning interest like you would on treasuries. The Fed lends against assets. It's a bank. Other banks, commercial banks, have their accounts at the Fed, just like you have an account at the Fed. It's a freaking bank. The government prints money. If I get a Social Security check, that's mine. My balances went up. My financial position went up, assuming all else equal, okay? If I get a loan from a bank, even from the Fed's not going to lend to me, but let's say I get a loan from a bank, the bank has a lien against or takes some of my collateral, okay? If I get a mortgage, I get money to buy a house, but the bank has a lien against my house. It essentially owns my property. It owns my house until I pay that off. So my financial position has not changed. Now the house might go up in value, and that's equity, and that's like essentially some money in my pocket. But that's a whole different thing. The Fed is a bank. And all of you running around with this printing money, the printing money, like these fools, like idiots like Jim Rogers and Schiff and all these other people, they don't understand central banking. The government, yeah, if it sends you a check, that's a net addition. If you look at the Fed's balance sheet, which comes out every Thursday, that they publish, it's free, everybody can look at it, available, public information, that's the H.4.1 release. You could see the Fed has assets and liabilities, and when the Fed does something like quantitative easing, its liabilities go up because those are reserve balances, that's a liability, and its assets go up by an equal amount. Those are securities that it took in exchange for those reserve balances. Now the Fed sets interest rates, but so does your bank. If you go to your bank and you take out a loan, the bank is going to set an interest rate on your loan, depending on, factors. What's their cost of funds, etc. Same thing. The Fed does have something that regular commercial banks don't have, and it's a regulator for the financial system, for the banking system, which I don't even know if it does its job very well when it comes to that aspect, to be honest with you. Because we've seen plenty of times in the past where it kind of tripped up or messed up in the regulatory capacity. I also think, like right now, with this whole situation with the supplemental leverage ratio, I think they got it wrong. I think putting capital requirement on reserves and treasuries is stupid, but I'm not the one who makes the rules. And don't forget, a lot of the Fed governors, these people on the FOMC committee, they're a bunch of economists. And we know the type of economics that comes out of academia these days, or it's been that way for a long time, is this monetarist, it's just junk. Neoclassical monetarist junk. They all operate under this false understanding of the monetary system. So I wouldn't get all, what do they say, get your panties in a bunch over the Fed. It's just a bank. And you got a lot of people in Congress who don't understand that as well. People like Rand Paul and these others who just, they just don't understand. If you understand banking, it completely translates to the Fed. Extending credit. Credit is not money. It's giving something and taking something away at the same time. The financial position has not changed. Whatever the Fed does, now it can affect the financial position of the economy in the aggregate. Like, for example, when it raises rates, that's a fiscal operation, but that's the Treasury that pays interest. Treasury is then writing checks to the economy because the Fed raised interest rates. But that's not the Fed that's doing that, that's the Treasury. So a lot of this stuff, you just gotta, bring it down a little bit. Stop getting all worked up. Stop ascribing all these mystical powers and it's evil and this and that. I mean, knowledge is an incredible thing. About a long time ago, primitive tribes, they'd see lightning in the sky, and for them, that was the gods were angry. We know where lightning comes from. Knowledge taught us that lightning is electricity generated from static electricity in the air. Knowledge can take away a lot of the crazy beliefs and the mythologies that I think a lot of you still like to believe in. You don't have to use knowledge if you don't want to. Me, personally, I happen to like being educated, informed, and knowledgeable. That's just me. What can I tell you? All right. Anyway, that's it for today, folks. Enjoy the rest of your Saturday. The Fed is a bank.